In business news, despite high inflationary pressure and the lingering foreign exchange volatility claims paid out by Nigeria's top insurance companies surged to above 94 billion naira in the first 9 months of 2022. According to reports, insurance claims expenses of the top 5 insurance companies, namely Custodian Insurance, NEM Insurance, and AxaMansard, AIICO, and Coronation Insurance by net assets quoted on the Nigerian Stock Exchange recorded a 40.7% surge compared to 66.8 billion naira in the same period in 2021. The report also shows that the total net claims for 2021 was 90.1 billion naira and a net premium income of 148.7 billion naira. Well, this suggests that the insurance companies still managed to increase their net premium income amid the rising cost of meeting claims obligations in the country. Inflation increases the risk of higher operating costs for insurance companies when they honor their claims to their customers for life and non-life-based products. Meanwhile, as Nigeria's inflationary trend continues to surge with no sign of abating, the Center for the Promotion of Private Enterprise, CPPE, has urged the federal government to tame the supply-side pressures to the country's inflation by granting concessionary import duty on the intermediate product for industrialists, especially those in the food processing sector. According to a statement by the CPP's CEO, Dr. Muda Yusuf, in Nigeria's high inflation rate is a major macroeconomic concern to many stakeholders in the nation's economy. He explains that these are largely supply side and policy concerns, adding that monetary policy tightening in most economies around the world, especially the leading economies, is also driving imported inflation and the depreciation of the exchange rate. Mr. Yusuf added that other causes of mounting inflation includes the escalation of production costs, which negatively impacts profitability, erosion of shareholders' value in many businesses, weakening of investors' confidence, and decline in manufacturers' capacity utilization. Recall that Nigeria's inflation accelerated to 21.09% in October from 20.77% in September. Now, in a bid to drive the pursuit to join the global communities to advance digital services and enhance quality communications infrastructure for the benefits of the citizenry, the Nigerian Communications Commission says efforts are being made by the Commission to timely auction available spectrum for 5G services across the country. Addressing journalists at the Stakeholders Consultative Forum on the draft information memorandum of the 3.5 gigahertz spectrum auction in Lagos, the Executive Vice Chairman of the NCC, Mr. Omar Dambata, explains that there is need for industry players to understand the genuine vision of the Commission to equip the nation with the latest technologies and services, which is the focus of the efforts to deploy 5G services nationwide.
What we do is characterized by regulatory certainty and flexibility, as you are aware. And if there are challenges in the way and manner rollout obligations are not being met, we should be informed about these challenges. And we'll put heads together to find a solution to these challenges. That is our role. That is the approach of the NCC. You know, an approach that is most flexible, predictable, and we even deploy elements of regulatory diplomacy in our engagements with critical stakeholders.
The 5G services are so revolutionary in terms of normal communication capability that it requires a whole new range of devices. So this is building up now because the industry has been preparing for this for years, but the scale of this is still so big that we have to be patient for this to come up a little bit slowly.
Asian stocks were mixed today while the US dollar stabilized and treasury yields remained depressed as investors tried to assess the outlook for Federal Reserve's policy following stronger than expected retail sales data. Japan's Nikkei changed slightly, recovering from early Wall Street-inspired losses, while the broader Topix index was up 0.4%. Hong Kong Hang Seng tumbled 1.35%, with its tech stocks plunging 2.91%. Mainland Chinese shares also declined, with blue chip falling 0.57%. Australian benchmark added 0.19%, while South Korea Kospi dropped 0.58%. MSCI's broadest index of Asian Pacific shares outside of Japan slid down 0.77%. U.S. e-money stock futures indicated a 0.3% rebound, following the S&P 500 0.8% overnight retreat. Japan's imports in the month of October surged by more than a half from a year earlier, as slow growth in exports, which enlarged the trade deficit, weighed heavily on the yuan, recording a trade deficit of 2.09 trillion yuan in the month of September. The world's third largest economy has depended on exports of processed goods such as cars and electronics for growth over the past few decades. But Japan's policymakers are concerned more about the impact of surging imports on its resource-poor economy. The trading gap is said to be worsening the pain felt by households struggling to make ends meet amidst currency-driven price hikes of imported goods and by import-reliant businesses facing difficulties in passing cost rising on the customers. Latest government data showed that Japan's economy had shrunk between July and September for the first time in a year, as import outpaced exports, knocking off substantial portion of gross domestic products. In another report, Indian refiners are said to be cautious of buying Russian crude oil after December 5, when European Union sanctions take effect. Pending clarity on the proposed G7 price cap mechanism, the Asian giants, who are two of the world's top three importers, had become Russia's biggest customer after the West shunned Russian oil after the outbreak of a war in Ukraine. Meanwhile, Chinese refiners have already begun slowing down requests from Russian oil imports. The reduced buying by both countries will leave Russia chasing alternative customers, potentially depressing prices, even if those new buyers are unlikely to join a plan by rich nations in the Group of Seven G7 to cap Russian oil prices. Now, oil crude oil slipped today, pressured by easing concerns over geopolitical tensions and Chinese demand worries, although signs of the tighter supply, including lower U.S. inventories, lend support. Now, U.S. West Texas Intermediate crude experiences a downward price margin of 0.92%, selling at $84.80 per barrel. Brent crude futures still in the red zone, selling for $92.33 per barrel, with a downward price review of 0.57%. Bonny Light sells for $91.97 per barrel, with a decline of 1.26%. And for the OPEC basket, crude oil dealers offer $91.16 per barrel, with a downward price review of 3.45%.